want to get Anthony Chan in here. He is former JP Morgan Chase chief economist, as well as James McDonald, CEO at Hercules Investments. And of course, we have Brian Sozzi with us and Jared Blickery. Good morning to you all. And Anthony, I'm going to start with you. We know that this report does not reflect the full picture of the coronavirus impact, but what are your thoughts on the unemployment rate rising to 4.4%, over 700,000 jobs shed in the month of March?
Well, again, Alexis, this report really reflects the beginning of the effects of the coronavirus. I think we'll see a lot more. We've seen close to 10 million people filing for unemployment insurance. We know that historically, not all those individuals qualify for unemployment insurance. And in fact, we know with this new stimulus bill that many of those workers will be called back into work. Even if they're not physically working, they'll be on the payrolls. Because, again, a lot of these small businesses will be able to get the money back once they file the forms. But nonetheless, the number is bad. And guess what, Alexis? I think that before this is over, we will have as much as 25 million people unemployed, which I think will give you double-digit unemployment rates, certainly sometime in the second quarter. And the number could go up to as high as 15%. Even though a 4% number is scary, a 15% number is even more scary.
Most absolutely. James, I want to get you in here. Your thoughts on how an investor is supposed to digest a report like this. We knew it was going to be bad, and many are saying it's really just the tip of the iceberg.
Right. Well, even though we knew this data wasn't going to include the beginning of the stoppage of work and the stoppage of people leaving their homes, we still had estimates. And Goldman's estimate was anywhere from 0.3 to 3.8. So we're 20% over the high-end estimate. And so what investors need to do is recognize that the reckoning of this virus is coming and to prepare for it economically in their portfolios. We've been telling our long-term minded investors to move to cash and wait till the selling abates so that we can start buying good discounted assets around the world that will have long-term upside. But now is not the time. As we digest this information, it's important to understand no one even came close to calculating the impact. As a precursor to the data that will come out for April, those estimates now need to be revised. Those estimates now need to be increased. And we need to prepare for a serious situation. But this is not the grapes of wrath, right? We have so many programs, so many philanthropic organizations. We will get through this. There's going to be a lot of support injected into the economy. We've taken half of the U.S. budget to inject programs already before the crisis has even hit us. And so it's important to understand that there will be a process through this. And I don't think it's going to take a terribly long time to recover.
You know, you're right, James. There is no forecasting models built to deal with a situation that is unique as this. We have tremendous uncertainty, and the government is doing its best to help. We know today those small business loans are going to be available to millions of small business owners. They can start bringing those applications to their banks for that $350 billion that's in that stimulus package. I want to get over to Brian Sozzi, though, and see, Brian, what's sticking out to you here? Because, you know, if this was a quote unquote normal report, average hourly earnings looking pretty good, you know, the time worked by employees looking pretty good, but how much does that really matter at this point?
Yeah, that's one red flag among many, Alexis, inside of this report. But other one I'm looking at is in the first paragraph: leisure and hospitality jobs minus 459,000. Now, just imagine in the April employment report, that number is likely to get worse as restaurants and small businesses remain closed. And I keep coming back to this, and I'd love to get Anthony's thought on this. You know, this notion of a V-shaped recovery seems like fallacy. We're in for some severe stretch of economic data. And Anthony, do you think Wall Street has to really downwardly revise its earnings estimates even further, their GDP forecast? We've seen some shocking forecasts, but maybe not shocking enough.
Well, I think I certainly agree with you, Brian. The numbers are not going to be pretty. I just think that this stimulus package will cushion the blow, but it will still not be enough. We've seen some estimates already on the street suggesting that we could see as many as 47 million people unemployed. Remember that a lot of people are working from home, but the service sector, you cannot do those jobs from home in many instances. A lot of restaurants, movie theaters, you can't do those things from home. So we are going to see a lot of pain, and it would not surprise me at all if we see real GDP numbers in the second quarter going down as much as 20% or even more. This is not going to be pretty, but you got to remember that when people try to compare this to prior recessions, it's not really apples to apples, because this is something that we actually are self-inducing. We're slowing it down, then we'll be turning it on. The only fallacy, and I agree with you, Brian, is that when we start turning the economy back on, it's not like turning on a light switch. Some of the wires will get frayed, some of them will be broken. Not all those jobs will be coming back in the same exact way that they were let go in the first place.
James, we're seeing Dow futures rally off of this number. I know you're a little more bearish on the market, but can you explain why the futures would be reacting like this?
Well, it's still early. I think the massive fall in the market was so swift. The retracement was swift. The pullback following the retracement is swift. I think that the market will come down. The market will follow the numbers. We don't need to be in a rush to see Armageddon in the Dow, but it's coming.
What do you guys make of oil right now? Because I just want to bring that into the conversation because it had its biggest one-day gain ever, up 25% yesterday. What's your outlook for oil and how it may play into the pain that consumers are experiencing, millions of people losing their jobs? But I guess the silver lining here is that oil prices are going to be low for them. Anthony, I'll give that one to you.
Alexis, I think that right now oil is another one of those products that is being controlled, because the price of oil is really now a function of whether or not we have a deal between the United States, Russia, and of course the kingdom. If we have some sort of a deal, oil prices will stabilize. But for consumers, this is great news, because even if they stabilize, they're probably going to stabilize in the area of $25 to $30 a barrel, which is much lower than we saw earlier this year when we were looking at prices of $60. So this is a big boom for the consumers. The only problem is that the consumer is not really going to benefit that much, because guess what? They're not flying, they're not driving, they're not going to work, they're not commuting. So the benefits are there, but they are somewhat limited. And it's really a mistake to look at the price of oil declining and just say, oh, that's clear that the economy is collapsing, because again, this was self-induced. People still are looking at the price of oil and saying that if it rallies and goes a little higher, it's good news, because it means that the credit markets, we know that a lot of our bonds are tied to the energy sector, and so we won't see as many bankruptcies. So it almost is in our interest for oil prices not necessarily go back up to $60, but certainly to stabilize. And then one last point, why is the equity market rallying? I think that in the back of their minds, the equity market is hoping that the fourth stimulus package is coming. The worse the news. You've heard news about a potential stimulus, and maybe even Mnuchin going back in the well and asking for more money after this package runs through over the next 2 to 3 months.
Yeah, you have to think that is definitely coming and coming soon. James, in many ways, this report can be discounted by the market because it is backward looking and doesn't include the last 2 weeks where those unemployment claims blew up. So looking ahead to the April jobs report, which will be released, I believe, May 8th, which could capture a much clearer picture of the damage caused by the virus. Some economists are predicting that we could see 20 million jobs lost at that point. What are you predicting?
It's difficult to use these data to interpret what's happening for a few reasons. Well, one is these are survey data, right? And how many people are filling out surveys right now? If you get into what BLS is projecting, you get into what Congressional Budget Office is projecting, and look at the reporting agencies and how they collect data, this still requires respondent participation. And if you just look around, people aren't really doing everything that they normally do in economic cycles. People are staying home. People are concerned about their jobs. I don't think the survey data are going to truly reflect what's coming. They will give us an indication. And then also, we've got an injection of a lot of census workers that might skew the numbers as well. A lot of census workers are going to play. It's going to be difficult to use these data to determine exactly what's going to happen. We're going to have to use some of the survey data, some of the earnings, and then also just use our eyes and ears and listen and watch and see how businesses are responding to this. The data that come out showing unemployment will not be reliable. It will be just a sense of how things are going, but I don't think it's going to be positive. Obviously, it's just going to be the beginning. We still have many, many, many weeks to digest what staying at home means, what no movie theaters means, what no retail sales means, what no waiters and waitresses and hospitality. All that still has to get factored in the coming weeks. And so April, May, June, there's a lot of data to interpret, and we have to take some of it with a grain of salt.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.